Hi everybody, this is Lara at pureelliottwave.com. I'm going to analyse QQQ for you today. I've got a full data for QQQ from its inception here back in March 1999, and I'm going to start my Elliott wave count from the most price extreme, from the lowest point down here. This is a monthly chart. Elliott wave analysis first, and then we'll do a quick little bit of classic analysis. I'm going to, from this low here in October 2002 to this high here, I think I need to have some cycle degree labels in here. So let's change that to cycle. And I think this looks like a first wave here. This looks like a second wave zigzag. So the question will be, is the third wave over? And I can tell you right now, it's probably going to be impossible to answer that question with any certainty. So let's see. I think it could, possibly could label it over here. The size of this downward movement does look like it's getting closer to equivalency to this, and this is now bigger than these prior corrections within this bull market here. So I think we could possibly label cycle 3 over. Let's see if it will fit as an impulse. No, I think we have to put primary 3 and 4 up there. And I think primary 1 and 2 here. So primary 3 is longer than 1 and 5 is longer than 3. This is a semi-log scale. And primary 1 and 3 are extended and primary 5 is not. Okay, so that meets all Elliott wave rules. Let's save that and have a look. Well, before we go, where would the invalidation point be? Pretty obvious. Cycle 4 may not move into cycle wave 1 price territory, so the invalidation point is down here. So I've added my invalidation point. Cycle 4 may not move into cycle 1 price territory below 55.07. I've drawn an Elliott channel. I've drawn it from 1 to 3 with a copy on 2. This is on a semi-log scale. 4, if it's deep enough, should it be expected to find fairly decent support at the lower edge of that channel. And so the question I would want to ask at the weekly and daily chart level is the structure of cycle wave 4 over, or should we be expecting more downward movement? And the other thing to answer is cycle 2 looks like a really good looking zigzag. And so let's expect cycle 4 to exhibit some kind of alternation, maybe a multiple zigzag. It's obviously not a flat or a combination. It's got a clear counter-trend slope. This is a strong downward slope, not a sideways movement. Let's take a look at the weekly chart level. Okay, at the weekly chart level, I think I can see this might actually be a zigzag. Let's have a look. I think I can see a 5 down here for primary A, yeah. I'd put intermediate 1 down here, intermediate 2 over up here, some kind of combination, or maybe an expanded flat. Intermediate 3, oh no, there's going to be some, I think intermediate 4, a flat. Primary B, a flat. Let's just get some labels on intermediate 3. I'm going to have to check the subdivisions of intermediate 3 at the daily chart level, and the subdivisions of primary B as well. And so if that's the case, then primary C looks like an incomplete impulse, and have to check the subdivisions of this at the daily chart level as well. Where's my third wave? It looks like this. Could be currently a fourth wave bounce. So that's what it looks like at the weekly chart level. Let's save that and have a look at the subdivisions at the daily chart level. Let's start off with primary A. So let's expand this out. I can see a problem already. There's an overlap here. This is not necessarily going to work. So intermediate 1 looks like a leading contracting diagonal. Yeah, that meets the rules regarding wavelengths. Intermediate 2 looks like an expanded flat, no problems there. No, there's an overlap there. I think this is better. So intermediate 2 looks like a flat. Could intermediate 4 be a double combination? It's really time consuming compared to 2, but I think the subdivisions here are going to fit better. Yeah, zigzag X, flat. Yeah, I think that looks better. And now intermediate 3 fits perfectly as an impulse. No, I'd want to see this up here. And this here. Let's bring in MACD to help with the wave count as an indicator of momentum. So the third wave here within primary A, yes, has not the strongest, but it's certainly stronger than 1. 5 is a bit stronger than 3. That's okay. In markets with extreme volatility, that can be the case. Nope, I think I'd put this here. Yeah, I think that looks better. And I think I'd put this here for some kind of flat or combination to a zigzag. That looks good. Okay, well, intermediate C subdivided as a 5-wave structure. Well, first of all, actually, intermediate B looks like a 5, doesn't it? It could be a 3. Oh, intermediate A looks like a 5 as well. Okay, so I think this, nope, that's not going to work. Could 1 and 2 have been over up here, and 3 over here, and then 4 an expanded flat. Yep, and now we can see this 5 up. For minute C is a 5, and now this 5 down for minor 5 as a 5-wave impulse. That's better, and I think I would want to put this here. Excuse me, go away. Okay, so now primary B could be a zigzag or a multiple zigzag with an extended C wave. Yep, that looks pretty good. Happy with that. So for the short term, the invalidation point, intermediate 4 may not move into wave 1 price territory. So this is my first daily wave count. This has a really good fit. I would expect that a zigzag could be incomplete. I'll label it cycle wave 4. Primary C is in possibly the very last 5th wave down, so this could end in 2, 3, 4, 5 weeks. So maybe September, mid to late September possibly. So long as price remains below 290.87, this will remain a valid wave count. 2 targets for you. The first target, where intermediate 5 would reach 1.618, the length of 3 at 214. If price reaches the first target and the structure is incomplete or price just keeps falling, attention would then turn to the second target, where primary C would reach equality in length with A at 195. Let's create an alternate at the daily chart level. The easiest alternate to always create is something moving the degree of labeling within part or all of your wave count. So for this alternate, I'll leave that second target, but I'm going to consider the possibility that intermediate 3 within primary C is extending. So I'm going to pull intermediate 3 down here and consider what if it's not over, and what if this is just minor wave 1. So I'm moving the degree of labeling within intermediate 3 down 1 degree. And so minor wave 1 could be a complete impulse. Minor wave 2 may not move beyond the start of 1. So now with this alternate, while price remains below 310.74, it'll be possible that cycle 4 may be incomplete. Now let's draw a base channel from the start of 1 to the end of 2 with a copy on 1. This overshoot here shows us that this downward movement is probably a 3rd wave. We don't necessarily have to label it over though. This could be just wave 1 within intermediate 3. So here's my alternate. Let's have a look at some classic analysis. We're trying to answer the question, is this bear market over at the last low, week beginning 25th of September, 267.10? Let's look at it at the weekly chart and then the daily chart level. Well, there's some support here about 262.52 just below. This is not properly a bullish candlestick pattern, and this week isn't complete, so we can't draw any conclusions from that. The previous 3 downward weeks have made lower lows, and they've come with an increase in volume pushing price lower. There was a nice bearish engulfing candlestick pattern at this high, and here's an evening doji star just a few weeks later, really close to that high as well. Strong bullish engulfing candlestick pattern here, and a hammer, gravestone doji, bullish engulfing nearly, no, not correctly, bullish and piercing pattern here, no bearish pattern here. This isn't correctly a bullish pattern, and we can't make a conclusion because this week is incomplete. It's not a bullish pattern because the open of this week is not at or below the close of the previous week, so it can't fully engulf this real body. Volume actively pushing price lower. This was actually a downward week, a doji, lower low, lower high, strong volume. Volume pushing price lower here and here, although overall there is now some decline in volume. Downward weeks have stronger volume than upward, so that supports the theory of a bear market probably continuing. We don't see this volume profile switching from bearish to bullish yet. Upward weeks come with declining volume, downward weeks come with increasing volume. That profile is bearish. On balance, volume is making lower lows with price. Actually, there's some very strong divergence here. The close of this week, 185.3, and the close of this last completed week, 267.1. Price is a lot higher, but on balance volume is a lot lower. There's some very strong bearish divergence. Reading on balance volume is a leading indicator. Where it leads, price may follow. It tells us that there's a lot of strength, not just in price, but in volume pushing price lower. That's quite bearish and doesn't bode well for identifying the end of the bear market. It looks like it may not be over yet, so that supports the Elliott wave analysis. ADX at the weekly chart level tells us, yes, there's a downward trend. It's not extreme. It did get extreme here at the end of the last pivot low, just before this last bounce up here. The ADX line reached above both DX lines, not for very long though, so there's plenty of room to go before this trend gets into danger territory. At this low here, the close, 288.68. No, I don't really want to read bullish divergence here because this hasn't really formed a pivot low yet. And so you could read that as bullish divergence between price and RSI, but I've learned the hard way to wait until pivot lows and highs form before I try to identify divergence between them. There was a lot of divergence at the high between price and RSI, long-term divergence from back here all the way up to this high here. Some good strong bearish divergence, so it's unsurprising that QQQ moved into a bear market. Not so between price and money flow index from this point to this point, bearish divergence. Bullish divergence yet? Yeah, there is a little bit. The close here, 288.68, and the close here, 294.61. No, there isn't actually. So no indication yet of the bear market having enough weakness at the end of it to expect that it could be over. ATR is increasing throughout the bear market. That's normal for these markets, flattening off here and now declining. So the bear market could be coming closer to an end. This might be the earliest indication of some weakness beginning to develop at the end of the bear market. And stochastics moving into oversold territory. What about the daily chart level? At the daily chart level, not a lot of good candlestick patterns going on here. No bearish pattern here, no proper bullish pattern here, although this day was quite bullish, but it doesn't have push from volume. No bearish candlestick pattern here. This it's not really a harami, the real body of this candlestick. For a harami, the first real body should be long, the second real body should be quite small, almost a star, and that's a little bit too big. It's not a strong bullish candlestick pattern either. Oh, there's a couple of hammers down on this low here, followed by this. Nope, not seeing a lot of candlestick patterns at the daily chart level. Volume pushing price lower, volume stronger on downward sessions. Now, these three upward sessions overall coming with declining volume. This current session is incomplete. We cannot draw a conclusion on that candlestick. We're just in the morning of this Thursday session, so absolutely no conclusion about that little doji yet. So the volume profile appears to remain bearish. On balance volume, made a low with price down at the last low here. There's no range that on balance volume could have recently broken out of, so no signal. ADX is declining, now indicating no clear trend. It was indicating a downward trend which just reached extreme at the end of this last fall in price. But there's plenty of room to go before it could reach very extreme. And RSI just reached into oversold. Really, these points are about the same, so really no bullish divergence. If there is, it's very, very slight and just not enough to really take any note of. So these two together, ADX is not very extreme and RSI hasn't reached reasonably oversold, and there's no real bullish divergence. There is still room below before this bear market gets into danger territory. So I would expect it's probably not over yet. Assume the trend remains the same until proven otherwise. At this low here, there's some bullish divergence between price and money flow index. At this point here, the close 275.51, and at this point here, the close 267. So price is closed lower, money flow index is higher. This could be resolved by a small bounce. That's not necessarily enough to indicate the end of the bear market. It could be just enough bullish divergence to indicate a counter trend bounce to relieve that divergence. ATR increasing here overall as price falls, so there is still some strength to the downside at the daily chart level, and stochastics back in neutral territory. There is not enough technical evidence on this chart or the weekly chart to indicate that that bear market is over, so I would have some reasonable confidence in either of these two Elliott wave counts and expect more downward movement. So there's my two targets for you for QQQ. The bottom line will be a new high above 310.74 and then a break above the upper edge of this wide channel that contains all of the bear market. That would be solid confidence that the bear market is over and the next bullish run would then be underway. It's a long way away though yet, and I think we've got more bearish movement to go first, but coming up sooner rather than later, the end of this bear market, maybe mid to end September. Thank you so much for watching. As always, thank you so much for your support. My list is shrinking. It's down to just 13 now. I'm on the road again on Saturday, Sunday, heading toward the border of Ecuador to cross over. Hopefully that doesn't take too long. I'm going to try and continue doing as much free analysis for you as I can, but while I'm on the road, it just gets a little bit more difficult. So thank you so much for your patience and understanding.